Good morning. Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to hopefully make some money on the internet. Loaded up for discussion today, we have the Trump family reportedly wanting a stake in Binance. Assisi, former CEO, seeks a pardon. Bit of controversy there. Also had a big controversial vote on Solana. The vote to reduce Solana's inflation failed to pass. The issuance will remain the same. Brett is going to break that down in just a little bit too. And then finally, Russia will have been reportedly utilizing crypto for oil trade. That was reported by Reuters. We'll break down what you need to know there. We've also got the latest on price action on crypto and NFTs, plus a general discussion on what is going on in the macro environment that is increasingly important, I think, at the moment. So looking forward to that. I've got legendary Brett and David, investment partner at Silvermine Capital, with us today. We are looking forward to getting into it. Just a reminder, friends, before we do that, nothing that we say here is financial advice. This market is very, very risky. We don't know anything for sure. Please proceed with caution and exercise your own judgment, just as you do every other day. With that out of the way, legendary, it is Friday. It's the 14th of March. How are you doing? How are you feeling?
GM doing quite well. Honestly, also excited for the weekend. I feel like it's been a very volatile week and loads of things happening. Yesterday, after we spoke about some of the opportunities that we did explore or that we're like focusing on, and I shared for me it's Ethos and Sonic. I feel like I went on a Sonic spree yesterday of researching just some more APY and yield farms on there and exploring and reliving the great memories of DeFi summer, because some of the things on there are just hilarious when it comes to the yield and structure. And I'm a bit tired because of that, because those explorations were late night, which is rather rare these days, as you know, no more meme coins to keep me up. So I need to find a different thing to focus on.
That's fun. Yeah, as you say, maybe the explorations are taking a different form at the moment, but can't rest. There's always something interesting to do, and I think Sonic is an interesting one at the moment. We spoke about some other ones yesterday on the show as well. David, what's going on your side? How are you doing? What's catching your attention at the moment? How's things with you and Silvermine Capital?
Yeah, all good. I think it's quite a nice, like, sort of slow down, like breathing time, just reassess. As Legendary said, like looking at some new ecosystems, having the chance to like dig in and see what people are doing versus like the slightly crazy mania phase that we've had recently, whether it's meme coins or AI agents, which like we don't really focus on that at all at Silvermine, but obviously that they can be very distracting, and you always get that FOMO feeling, like it's just a natural part. And so it's good, right? We're, as we've said before, we're in the middle of raising our next fund. So this sort of like pullback and ease is like perfect timing for us, because just like the FOMO of a meme coin or stuff, if you're deploying liquid capital, like this is everything's on sale essentially, so it's like it's kind of perfect. So we're super excited. Nothing's changed fundamentally in the market structure for us long term. So these are just the great opportunities, and I know how easy it is to say that and how hard it is to have conviction on that sometimes, but this is the markets we live in. For those of us who have been around for a long time, it's just the same playbook every time. So yeah, all good this side.
Interesting perspective. Ultimately, that makes so much sense, right? Things are cheaper than they were before. So ultimately, stuff is on sale. So if you like the stuff, it is better now than it was a few weeks ago or a month or two ago. So especially if you're looking to deploy, which you guys are, makes a lot of sense. Brett, catching in with you here. We've got some comments in the YouTube comments. What are you up to? People thinking that you're on some type of mission out there in the mountains. Like,
yeah. So to touch on what Dave was on, like first picking the right stuff is the hard part, right? Like there's a lot of stuff on discount right now. The things that'll come back is the hardest part in this game. Predicting that.
Yeah.
I'm also eyeing to buy things, but I have no fucking idea which ones that I want to buy, because some of these things aren't coming back, and that's where the skill comes in that I don't have actually. So question or answers for why I look like I'm going to kill someone, I think is what the YouTube comment said.
Ready to pull the
This hard
trigger.
light.
It's not that you've killed someone, it's that you might just be about to.
Yeah, the hard light of this this Airbnb we're in is not doing me any favors apparently, and it's 4 a.m. So it is what it is. I'm out in the mountains right now. We came out here for I just got back from New York from hanging with the Mega E team, and wanted to go do some skiing with the girl. So we did a little bit of that yesterday. It sucked, frankly. It's cold as shit. It was snow blind. At one point, I felt like people were like, I'm skiing on the side of a mountain, can't see a goddamn thing. And it looks like people are literally floating above me by like 100 yards because I can't see the mountain. I just see a person that is doing things that look like they're skiing up in the clouds. It was not great. And I was like, I knew there's a edge to my left. I knew there's a person to my right. And I just kind of kept going forward and hope I wouldn't fall off. Yeah, so it was a lot of fun for my second time skiing ever downhill. Yeah, but now we're out here. We're enjoying the time. We're drinking in the market. You know how it is.
Sounds good. Sounds a little bit dangerous, and maybe that explains the countenance. So yeah, like it.
Yeah,
Good.
I'm also without my setup. I'm actually on a table in the living room, crouched over.
Oh, nice.
But we make do.
We do. We always do. Look, let's get into it. Starting with price action, as usual. Starting with the majors, we have Bitcoin, which is flat at 83K. We've got ETH, which is also flat at 1.8K. XRP is up a couple of percent again. XRP outperforming everyone at the moment.
Is anyone else disappointed with what like I was hoping for a cataclysmic event with all of these like giant liquidations, whether it was the hyper liquid stuff or whether there was like I know it was like Saturday, or Saturday, Sunday, there was like someone that was on the verge of getting liquidated. I put in some stink bids. All those things are just sitting out there now. Maybe there's something coming, but I don't know, man. Like that nothing has come that I thought was coming, like a big event to pay off all this like downtrend.
I mean, arguably ETH's gone from almost 4K to 1.9. So maybe that's the humongous downtrend, but you need some more. Where did you put your?
What is that? A downtrend for ants? This is crypto.
But we actually, I mean, it's a great question though, because I think that's what people are used to, right? People are used to that. But we had that segment on the show the other day. Greeny had shared this chart where the volatility is essentially decreasing. I don't know if that'll, I mean, that definitely not happened across all assets on meme coins and some of the more speculative coins. But for example, with Bitcoin, it does seem like the volatility is kind of reducing as we move forward. So I don't know. Maybe that volatility for ants is something we'll get used to more going forward. That'd be the question I put out there. David, before I do the rest of the stuff, like, do you have a thought there on the volatility and pullbacks and how people measure against previous markets to this one now? Previous cycles.
Yeah, I feel like, Brad, me and you were waiting for those like May 2021 crash. I remember just looking at my screen when I was at work at Goldman at the time, and I think stuff was going down like 70% in like a day. It was the craziest thing ever. And if you managed to catch those bottoms, I was like leverage trading on FTX back then, like, and every exchange was different. It was wild, like, and that's just like systematic failures across exchanges and stuff. I think that's checked. Like the infrastructure is better now. And to your point,
I vividly remember the feeling of like, I'm scared right now.
Yeah.
Buying.
Yeah, same. Whether we get those again, I don't know. Everything, like the volatility naturally as a market evolves and matures, volatility decreases. And you have to realize the point where we've come from to where we are now. Like, of course, it's still volatile, but like, holy shit, it used to be unbelievably volatile. And that's just naturally, the more capital that gets into a market, the less volatile it's going to be. The more institutions that are in here, the more risk measures that are put in place by people who are trading these things. It's just a natural evolution of the market. So you're still going to get black swan events, and you're still going to see things bleed slowly like we have done over the last few months. Whether we get 70% drop days without a real like systematic failure or hack or anything like that, I'm not sure.
I've got another real world indicator for you guys. At the start of this kind of cool down period, I was on a Monday. I said, boys, I'm going back to the gym. This is it. The mania's over. I'm going back to the gym. This is the real world indicator. I've got another one for you. The volatility will continue to decrease as the proportion of crypto conferences with people predominantly dressed in suits increases. We were just speaking before the show, David, we were talking about I think Brad and David are going to be at, is it DAS next week, done by Blockworks. And it's far more institutional, far more corporate, which is kind of a newer thing. I'm sure these things exist and have existed on the more institutional side for crypto, but like, I think that's accelerating. And that is my real world indicator of how the volatility will be proportional to. What do you think?
Yeah, hard agree on both those indicators.
I makes me think of the saying, like the volatility will decrease until suits decrease, or like that saying, like
suits max out.
Morale will decrease until whatever.
Yeah, when suits go up, volatility goes down. And I feel like if you reach like a 30% suit threshold, I need to move on to something more volatile, because then it gets boring here. Then we need like Web4 to come around the corner.
If we turn up to the show, if we ever feel obliged as we grow our profile on LinkedIn to turn up to the show in suits and shirts, we know that the asset class, we need to.
Does it count if they're wearing chucks? Because I know that's the cool thing nowadays, to wear like chucks with a suit, and then it like kind of balances out.
Yeah. Okay. Well, look,
you probably don't even know what chucks are. Do you guys know what chucks are?
Yeah, no,
I was just pretending like I knew what you were talking about.
Losers. Dude, chucks are like
Converse.
Legendary. Yeah, Converse. Yeah.
Oh, got it.
Legendaries.
You get like the cool, like the cool people on the West Coast that would wear like suits, like a suit jacket with like Converse, like leather canvas shoes.
But they're
how does that fit into the volatility?
Because it was a way to dress down suits. So it's like, does it count if you're not wearing like the super clean, fancy alligator skin fucking boots? You're wearing, cool chucks. So it's not really a suit.
But I was wearing chucks when I was like 15. That was the cool thing back then. But I do agree with Funky in the comments. On clouds. On is the shoe brand to go with. That's the new cool thing in Europe. Ons with suits is what I'm seeing more often here. Even though a former chancellor is running around in his suit, but is wearing on clouds. So that's the European way to dress down a suit. Instead of chucks, we go with ons.
Okay, I like it. We have a new volatility indicator, so keeping an eye out as we move forward for the year. Just to finish off the price action for you guys, where did we get to? XRP is up as everything else is not. Solana's pretty much flat at 125. Onto the meme coin side of things, we've been speaking about this yesterday. Doge is at 16, just down a touch. Pepe's down 3. Trump is up 8. Bonk is flat. Whiff is up a couple. Pengu's up 6. I think people are buying Pengu as, with one eye on abstract now. I mean, maybe they're buying it because they like the token, but there's also this play of like trying to get the higher multiplier on abstract. SPX Murad's coin is flat. AI16Z is up a couple of percent. Popcat is up 17%. That was actually announced that it was being listed on Robinhood along with a couple of other coins. I'll mention those in a second. Peanut was the other one. That's also up 10%. Interesting. So the Robinhood announcement having some action there. And that is that on the meme coin side of things. Getting into the headlines themselves, we had, as we said, Trump family reportedly wanting a stake in Binance as the former CEO, CZ, is allegedly seeking a pardon. This is kind of controversial piece dropped yesterday, reported by the Wall Street Journal. We'll detail those in more detail in just a little bit. We had a vote to reduce Solana's inflation, which failed to pass, so the issuance will remain the same. Brett's going to give the technical breakdown there. I know David's got some takes. And then finally, Russia are utilizing crypto for oil trade, reported by Reuters. So that is interesting to see. Some huge sales on the NFT side. Maybe again, we're noticing this. ETH is lower, so people are spending on the NFT side. CryptoPunk hoodie sold for 135 ETH, which, although it sounds like a lot, it's about $250,000, and that is actually one of the lower prices for hoodie punks in a while. And then also Botto, the AI, decentralized AI artist, sold Foray Esteem. This is on the secondary market for 187K. Pretty cool. Legendary, any other stuff to point out on the NFT side?
Yeah, a couple of things are actually going on. On the one hand, we reported yesterday on the One Gravity collection that free mint from 0G. That has corrected down a bit, sitting at a 1.2 ETH floor right now. Quantum Cats seem to have found a bottom at 0.13 BTC. Then on the abstract side of things, we do have Good Vibes Club. Again, ignore this minus. There you go. Looks better now. That collection we spoke about yesterday has revealed is still sitting way above floor, sitting at 0.12 ETH, had minted for 0.069 ETH. So in terms of the alternative collections, there is some positive price action going on. However, when we do look back at the majors, Pudgy, Azuki, Bored Apes, all those collections do continue their trend downwards.
Like it. Excellent update. Appreciate that, Ledge. Things kind of trending down, at least in USD value, I think there. Getting into the rest of the Web3 roundup to get you up to speed. Circle's US yield coin is to launch to global market participants via Circle Bermuda's digital assets license and operations. This is kind of interesting. Coinbase Ventures to democratize access to base deal flow with an Echo group. That's fun. Echo's been a big success story of this cycle where if you're a qualified investor, you can get access to some of these deals. If you join various groups, you want to invest in the base ecosystem, that's your opportunity. As I mentioned before, Robin Hood has listed a couple of memes, got Pengu, Peanut, and Popcat, all of which bounced today, or certainly up much more than any other memes. Pump Fund announced DMs available in the mobile app. Sam Spratt, this is on the art side. I posted my one yesterday. I was pretty happy with it. Sam Spratt announces the winners of the masquerade and reveals the masks of Lucy. They're trading at $7,500 after 2.5 ETH mint. That was when ETH was a little bit higher as well, though. So it's just like maybe $1,000 above mint price or something like that. Pretty cool collection. And then, as Legendary said, Good Vibes NFTs sell out around 0.06 and have doubled up roughly. That is that. The Web3 roundup to get you up to speed. Legendary, before we get into the main stuff today, we're going to go around the table here. Either things from the roundup or anything else that's kind of catching your attention.
Yeah, absolutely. I think the Coinbase Ventures / Echo group news is pretty significant. As you said, Echo being Kobe's platform that is kind of trying to democratize access to VC or venture-like investments to basically sit on the same table as VCs when it comes to terms and investment deals. And that partnership, more precisely with the Base Ecosystem Fund, is interesting. It's cool to see. I didn't expect that to come that fast, because if you think about basically the opposing ends of the spectrum of sorts, you have an institutional player like Coinbase running their own ecosystem funds, running their own venture funds, especially for their own L2 as well. And they basically have a lot of control by structuring in that way in terms of what protocols gain attention, gain mindshare, gain capital on their own ecosystem, on their own L2. And then you have the other side of that, which is trying to democratize that investment access for everyone who's like qualified to, be a part of Echo. And that is certainly not everyone. There's a couple of criteria, not only KYC, that you need to fulfill to become part of the platform. And well, obviously investing on Echo doesn't mean that you get a say in the company. It still opens the table and the checkbooks for other people to come on board as well. And if you're invested, if you have skin in the game, at least you will express that on the timeline, which is something that we love to do in this space. So it is something that is pretty cool to see. I like what Echo and Kobe are doing, and I did not expect that to come to life so quickly in a partnership or collaboration with Coinbase Ventures, to be honest.
Can I express a counter take? It's not really a counter take, it's a counter question. Something that, as an investor, because I think the headline for all of these things are always really positive. It's like, yes, democratization of investment opportunities. That's always really good. I get a chance to be at the table that I was not at the table before. And just the reality of a lot of this stuff, and I think this is coming out on the timeline a lot. I think, Legendary, you might have posted about it recently. A lot of other, whether it's KOLs or other people, have been complaining about getting into these types of investments, angel style investments, KOL style investments, pre-sales, and being completely left out to dry. Like whether they've entered ones which said that they were going to launch at a certain time and then haven't launched, whether they were ultimately slightly lower quality. I think there's a reasonable question that you need to ask, like, where are you on the deal flow? You know, we talk about the information pole, like how far down are you? How close are you to the source? How far down are you? You've also got to ask yourself the same thing on deal flow. Like, are you getting asked? And this is a hard question to ask yourself, right? Because sometimes you might have to realize that you're actually quite far down the pool. And lots of people said no to the stuff that now they are asking you to give money for. Why did those people say no? And so I think when you're looking at all of these things, there are some amazing ones on Echo, and you know, loads of them get sold out super fast. I mean, Mega ETH one is a classic example. The intention genuinely was to democratize it, and it was a great deal, and therefore loads of people got into it. So I think there are still occasions where that rings true. However, there's just this universe where let's democratize it because we've taken the ones that are already good so far. Now all of these other teams are coming to market and we need to access that capital. Can you guys fill the gap? Because we don't want to do it ourselves. Always worth thinking about when you're making these like important investment decisions. David, I wanted to come to you there for like your read on that and how it, you know, how you see that as someone that is, you know, always allocating at Silvermine. And yeah, what do you think?
Yeah, I think you both made very good points. I think it's great to see stuff like this, right? It's a step forward. But there's a number of factors to consider. One, what you mentioned, B-Check, in terms of, is this a case of, hey, we've got this, we're obviously have a great pipeline of projects coming through the Bakes ecosystem. These are the ones, and it's tough to raise out there, right, at the moment, unless you're like one of the darlings or you have great VCs. A lot of foundations and stuff are putting out deal flow and just be like, hey, we're really trying to fund this, and it's hard for these projects to get funding. So does this just become the projects that couldn't get funded? And then the other element of this is, when you are a retail investor or someone looking to do these types of deals, you need to understand the game you're playing here. And a lot of the time, it's these types of investments. It's not like back in the ICO days or even in 2020 where things were getting launched really quickly. You're getting 10% TGE. The vesting schedule is 12 months. These are now like much more like traditional venture, way more liquid, but it's 12-month cliffs. It's 3 years vesting schedule. Plus it's an uncertainty on the timeline of that thing actually launching. So you get a load of people going into that don't really understand that and want instant gratification that we're used to in crypto. You suddenly get a sour base of investors that are just in your Discord, in your Telegram, pestering you when launch, which can have a very negative effect on building the community and building out that increasingly valuable aspect of a project. So there can be a downside to it too. And again, if you're a retail investor going into this, you also need to understand the game that is played with these sort of investments. Is from a VC, you're investing in 20, 50, 100 projects, and you're expecting 15, 20% of those to be the winners. Some are zeros, some are flat, some are underperforming. So it's the law of averages, right? That's the venture game. If you're going in and just putting your 5,000, 2,000 whole investment check for venture into one of these deals and hoping like this is going to be my 100x, the probabilities are not on your side. So people just need to understand that. Obviously, always like only put in capital to these things that you're willing to lose and risk, but it's just an educational thing that needs to come with this, and people just need to understand the game they're playing.
Yeah, I think that's very true. People who have way too little money to invest are investing because they can afford to write 3 or 4 checks, and they do that in a very highly speculative way, obviously, but then they're also like extremely frustrated if, you know, you invest in 100 companies, you expect your 3 or 2 100x's or whatever, and you invest in 3 and you will very likely have 3 companies that potentially could, all of them, you know, so you could see all of them going to zero. But because to you those 5K, 10K, whatever it is a lot of money, you will be posting on the timeline, you will be constantly in the Discord or in the founders DMs about that. And that's not a very, very pleasant situation to create. And then you also have this effect that you have some of the very prominent KOLs when it comes to investment activity. Someone like Dingaling, for example. Dingaling invested in hundreds of companies. So then you have people who don't have that experience, and they see Dingaling on the board of investors, and they're like, oh, Dingaling is investing. That has to mean something. It means shit, because the part of his strategy is to exactly spray paint on the wall and see what sticks, playing the game very, very fund-like almost. And I do think that a lot of the times when you have like less experienced investors, they see, oh, prominent VCs on there, ding-a-ling, or prominent KOLs on there, let's throw money at this as well. But they play with a completely different capital stack, and that creates exactly the distortion that you just described, David.
Yeah, I think a whole host of excellent points. And to be fair, to be clear, sorry, no shade against this new initiative from Base. I think it's cool. Got to dive into the details on each one for their own merit. I've noticed that when these things happen, there's like a unanimous positive feeling towards it, and it's just there's a big caveat here where if you're going to participate, you need to kind of take into account all those things we just mentioned, and that maybe the time in the cycle and where we are, and all of those things we've just discussed. So
I can speak to the other side of that, like being on the other end of the Echo raise that Maggie did. We still have people occasionally that are like, wait a minute, we have a lockup. Like, we don't just get infinity day one. Like, guys, like, I know it was a rushed thing, but like the information was available to you, but people just aren't used to that in the space of having like actual terms associated to getting the thing. So that's kind of a funny educational arc that I've noticed.
Brad, you didn't sell them an allocation. You sold them a lottery ticket, and you told them that they won when when you took their money. You told them that they won. That was the communication that took place, and you gave them. Oh, no, okay, so that was the raise. The other one, I guess, on your side is you've got the bunny as well. So yeah, the fluffle is pretty cool. Yeah,
which is something that also got murked for having too much detail. People were they got it and they're like, oh, you said things about this. I thought you were just giving me an NFT and had infinity whatever things day one. No, guys, we wrote it all out. Please read.
Please read. Different deals for different people. The fluffle does this. The raise is structured in this way. As you say, gotta do the research. Interesting stuff. Brett, just wanted to come to you quickly before we get into the main stuff. Was there anything catching your attention aside from the major stuff, or should we get into the headlines?
Yeah, I mean, most of my time's been beaten down by doing stuff for testnet and Megeth. So we've been onboarding a bunch of builders there. I was actually just looking at our stats. People are like, now that we've opened up, we don't have visibility into who's doing what entirely all the time. It's not controlled anymore. So like just looking at the stats, some people are goosing it, doing stress tests on their own. Like we just hit like 6,000 TPS just because some Oracle providers like, hey, let's fuck around a little bit. So it's kind of fun to see some of that. And then I saw yesterday on my timeline that there's a lot of FUD going around with Abstract. So that was kind of a fun conversation to go because TVL is not as wasn't as prioritized as Lucas said, right? They're not doing DeFi stuff. They're doing consumer apps. So I think like right now they have something around 11 million TVL total on the chain. And DeFi Llama did not have all the apps integrated. So they're like, oh, Abstract had a $10 million raise and they only have 11 million on the chain. And the apps themselves only generated $70 of revenue, but that didn't have all the apps. Like that was an absurdly low number. And people like Multiply alone had earned like 6 ETH that day when everything's going on. So like there was just a lot of back and forth between Luca and a lot of DeFi analysts that were dunking on them because of DeFi Llama. So that was a lot of fun to watch. But yeah, other than that, it's been pretty chill on my side.
So in the end on that, the numbers were wrong, right? They were making more money than it was coming up in the data, basically.
Yeah, it's like if you guys spend any amount of time actually like trying to do data detecting, aggregation, whatever in this space, you'll find that one, it's pretty fucking hard, right? They're open systems, which is nice, but they're not all standardized, and there's just a lot of information, right? There's a lot of chains. Each chain has a bunch of contracts. You don't know who's deploying the contracts, like the permission of the system, all that stuff, right? So like you'll have a few people who are very diligent about that, but it's very, very hard to keep up with. DeFi Llama is amazing. It's an open source tool. You have access to all this information, but a lot of that stuff is reliant on teams like actually coming to them and saying, hey, this is the contract, this is the label, this is like how it actually works, because they don't have enough time to actually do that. So, we have a bunch of dashboards. You have Dune, which people can make their own queries. You have DeFi Llama, you have like Grow the Pie, which has like does their own things, a lot of these like public goods initiatives. And yeah, so like for them specifically, Abstract team had just not prioritized making sure that like DeFi Llama had all their contracts updated to what they understood. And same with it's actually on the Abstract team. It's also on the teams that are building on top of Abstract, making sure that their stuff is visible. I view it mostly as a marketing tool. Like if I were to build an ecosystem, like that's free content creation, right? If I can make sure my stuff is integrated into these public data platforms, data analysts will come across and they'll make screenshots and they'll do whatever. They'll talk about your stuff. It's free marketing. There's a whole cohort of people that they make their information, their judgment calls based on this public data. So it behooves you to make sure that you're well integrated into these things for free. And that just wasn't the case for Abstract. At this juncture, I'm guessing will be much more robust here in the next week or so, but it was not prioritized previously.
That's a really, really good point. People take these numbers and as their basis for all kinds of analysis and the conclusions which they draw, right? Whether that's from DeFi Llama or June dashboards. You want people to have the best information possible. That's a good point. Hadn't makes complete sense. Hadn't truly thought about that enough as part of what was going on yesterday with Abstract. Interesting stuff. We've got a bunch of important headlines to get into today. Let's do that now. Legendary, you're going to take us through the Trump family. What's going on here? Do they want a slice of Binance as well? CZ's trying to get a pardon. What's going on in this story that we need to know?
Absolutely. Very interesting, although a bit messy story coming out yesterday, suddenly saying or claiming that the Trump family wants to take a stake in Binance US. That was on the back of the news, which we reported yesterday, that Abu Dhabi did invest $2 billion in Binance. The difference here being Binance and Binance US being separate entities. And there's been a couple of things going on here. So what we do know is that a Trump family representative discussed buying a stake in Binance's US arm. The idea behind that would be that World Liberty Finance is the entity to invest, to acquire that stake. And apparently Steve Witkoff, a friend of President Trump, was involved in those talks. And all of that is based on a report in the Wall Street Journal. And the controversy, or the part where it gets a bit murky, is that CZ on his hand is criticizing that Wall Street Journal article and saying, look, he has not been in any talks when it comes to having this investment in Binance US. This is just simply not going on. This is not happening. Then again, the article is making the point that this is more so that the Trump family wants to make that investment, and maybe that conversation has not reached CZ yet, which then again begs the question who the Trump family has been talking to, because the claims are that they've been talking to someone when it comes to that investment. And this is just one part of the story. This is the investment part of the story. The second narrative that is also unfolding as part of that is the whole pardoning narrative, where CZ, where basically it has been reported that CZ is seeking a pardon by US President Donald Trump, which he is replying in a completely different way. He's saying, look, no felon would mind a pardon, especially being the only one in the US history who was ever sentenced to prison for a single BSA charge. But he's neither confirming or denying whether he's been, seeking for that pardon or discussing that with anyone in the president's environment. However, again, on the deal side of things, and I think it's important to look at the difference in how CZ is wording those things. He finds very clear words by saying that I have had no discussions of a Binance US deal with, well, anyone. So those are the two different story arcs, if you want to call them like that, they're going on. On the one hand, there seems to be an interest coming from the Trump or Trump family to take a stake in Binance US. And it seems that CZ would completely separate from that, be happy if a pardon somehow could work out in his favor. And then the Wall Street Journal kind of tried to combine those two narratives in saying, look, this is the thing that might be going on. They get to invest in Binance US. He might receive a pardon back for that. Obviously, it didn't formulate it as explicitly, but this is also what the timeline has, picked up and created this narrative that this is the things, those are the things that are happening in the background. And I think it's important to kind of untangle that and present it separately.
Interesting. Yeah, I'm reading Laura Shin here also kind of just reporting on the news saying that according to the source, CZ is trying to sell at least a portion of his majority stake in the US franchise. So I guess maybe part of the story is that Trump family are interested, but also see there, at least from the reports, there appears to be some willingness, even if they say otherwise, of a desire to sell a portion of the US stake. Having said that, the thing that I would say, and curious to hear your thoughts on this, David, from a more kind of institutional perspective, even with a bit of a macro perspective here. There's just a lot of this reporting going on at the moment, I've noticed, and just maybe more of a media point. So many times now, these stories are coming out, whether it's about World Liberty Fi or, frankly, all kinds of things in crypto at the moment seem to be leaning towards this thing where it's like this source says, and then there's just some random stuff being said, and then people deny it. But it's you know, you don't really even know if there's a story here necessarily. It's just kind of reported this, reported that. We don't know. David, do you have a strong view here? Strong thoughts? Does any of this add up to you?
I mean, on the reporting side and the pardon stuff, I think that's just like extra spice, right? What I think is happening is a lot more deals and interest in taking equity stakes in these businesses.
That's true.
So you're going to start seeing more headlines like this. And I think the main driver of that is people's appetite and the US's appetite now to be able to start IPOing some of these companies. So people are gearing up. They want the private positions in certain market leaders on the equity side because they know they're going to get their liquidity event, which was previously very, very unlikely. So you've got people like Animoca gearing up for IPOs, Kraken gearing up for IPOs, a number of staking staking companies gearing up for IPOs. So now it's kind of like who's getting their chips down, who's doing the deals. So you're going to see more M&A, you're going to see more private deals being done. You saw even Binance, right, take a $2 billion investment. Was it this week or last week? I can't remember.
Yeah,
so you're going to start seeing that, and then with that, obviously comes the extra juice of why they're doing this. I'll pardon this, but that's just natural reporting. But expect more of it, I would say.
That's a great point. This connection to the IPOs, Brad.
Yeah, I was just gonna say, like, are you guys at all looking to, like, I think things got a little overheated for like investing in startups or whatever companies coming to market. I'm actually now my appetite for actually looking at deals again is starting to pick back up. I didn't know if that was shared by you guys, just like in the market deals that you've seen come in the background.
Yeah, like we're in this like transition phase, obviously, from fund one being fully deployed, raising fund two. So it's been quite nice to just, especially going into last year, right? Some of the valuations were getting so like overheated. So it's kind of, and there's always a huge lag effect with like private markets versus the public markets. Just naturally, teams spend months and months preparing to do a raise at a certain price, and they go to market. The public markets could have shifted massively. So I think over the next few months, you're starting to see projects really struggling to raise, as we mentioned earlier, with on the base ecosystem point. So naturally, those things correct. Now it's still very, very competitive for getting the best deals, right? The ones that are heavily backed, have the teams with a strong background, so they're always going to be competitive and priced higher. And if you can get into those, it's always going to be a good risk reward. The ones at the lower end that are struggling to raise and may still be overpriced. It's just so hard for some of these new projects coming out now and launching. So I think we're going to see an overall correction in some of those valuations. And again, it's then a numbers game, right? If you're deploying into those deals, you have to be deploying into a lot to ensure that you've got the best weighted risk reward.
Very, very interesting. I do know what you mean, Brad. Like there was definitely a period of time where things got like really crazy. And it's almost like now, if the numbers can come down a bit, you start to think like, okay, maybe, you know, if you're of the belief that the cycle's not over, then on the shorter term time frame, it would be a nice time to enter. And actually, to be honest, if you're of the belief that the cycle is, even if you're of the belief that the cycle is over, but you're bullish crypto long term, which is still like a bullish stance to have, then yes, the bear market, if you were going to say that we're in a bear market, that's the best time to get in because you'll get better prices and you're still bullish long term, and everything should correct down and you get a better deal. So I know what you mean. I basically started saying no to a lot of things almost instinctively for a while. And now I'm kind of open to it. Definitely made that slight shift as well on a personal perspective. Interesting stuff. We got another couple of really interesting headlines to get into. Let's do those. Brad, you're going to take us through the Solana vote. I don't know if maybe people have been crashing out about the price action on meme coins and majors and everything else, but this is an interesting point on Solana. What's going on with its inflation and the vote that just took place?
Yeah, so I don't know how much you guys have covered this in previous shows, but there was a vote on SIMD 0228, which was an initiative to lower Solana's inflation. It's currently set at 4.5%, and this would take it down to around just under 1%. And based on the amount of stake that would actually be like staked, Solana being a delegated stake protocol, the actual number that is staked is much higher than like say Ethereum, for instance, right? Because you have to actually deposit your ETH to do something. You can't just point it to a validator. And the actual proposal itself targeted roughly around 50% overall, like as the target number to adjust the inflation around. Anyways, they had that going the last few days, and it just concluded ultimately not passing. And the stats for that was over 74% of total stake voted across 910 different individual validators. The breakdown of the votes was about 43% of the stake said no, 27% said yes, and abstained was 3%. Like the notable difference here, because governance broadly is a little, it varies based on ecosystem, right? So we hear a lot about governance inside of the Ethereum ecosystem, but there's no on-chain component to it, right? You're not like actually like using your Ethereum to vote for anything. In that ecosystem, you're literally just, it's 7 client teams, right? They all kind of roughly agree on something. They have these all core dev calls, or all core dev calls, where they kind of agree on like what EIPs and stuff are going to go into the next batch. And then they eventually, loosely coalesce around stuff, agree on things. And then that's what they implement over, 6 months, whatever. This is an on-chain governance equivalent, right? So you put a proposal forward, everyone votes with their stake. And then based on the outcome of that, usually dictates how the client teams actually implement this stuff. You guys may remember Max Resnick, who was famously in the Ethereum camp for a long time. He worked for Consensus over there as someone trying to like, we'll say, make Ethereum great again, the L1 great again, right? Like he was trying to push for Ethereum to scale, do multiple concurrent proposers, like all this stuff, right? So trying to make the mainnet bigger, faster. And he ultimately went over to a client team on Solana, now Anza, and Anza was the leading protocol the leading client team that was actually trying to push for this change. He believed that, frankly, like with a 4.5% emission rate out of Solana, and a certain percent of that having to be paid out to for taxes for any validators that are based in a country that had to pay taxes based on claimed like rewards, staking rewards. That they're just trying to like reduce the leaky bucket, or the holes in the leaky boat is kind of how he was referring to it, and just bringing that overall percentage that was leaking from the ecosystem down. Again, it failed. Mert had a commentary on it saying that like it was basically a huge distraction. There's a lot of contention around this. You saw some campaigns between Toli, and the actual proposal itself came from the multi-coin guys. So you guys may know those guys. Kyle Samani and Jane, I think is the other guy's name, who are big VCs in the Solana ecosystem. They've been beating the drum for a while now, but ultimately it failed. They're probably going to revisit it. You're going to see some iterations on the actual voting process. And again, Mert was commentating on it. He runs Helios. Helios is a infrastructure provider over there, has one of the largest validators. And wants to make sure that the participation is just a little cleaner going forward, even though the total participation for this particular vote was actually really strong, 70-something%. Like I said, that's seen as one of the highest voting turnouts for governance in a long time. But voting failed, but you'll see more of the stuff come forward over the next few months, I'm sure.
Okay. Excellent summary. Appreciate that. Just as a quick kind of just to put a bow on that, and I know David, you've got a take on this as well, though. So it seemed like the VCs actually in this case were the ones who wanted to reduce the issuance, right? It was their proposal.
The proposal was put forward. Yeah.
by Multicoin. And then why do you think then, Brad, kind of having a look at how things played out, like what was the general take of why it should not be? Like they wanted it to be reduced, I guess, just to reduce sell pressure on the token. What's the other side that people are trying to?
I mean, it wasn't so much to reduce sell pressure, but it was just like they thought it was overall healthier for the ecosystem, right? Whenever you don't have the emissions of the token, right? Like the counter to this is how do you make your ecosystem sustainable, right? Like the validators are people that are running machines that cost a amount of money to actually run, and they need like emissions or inflation is the thing that like incentivizes them to keep doing it, right? It makes it either net neutral or profitable. A lot of the Solana thesis, if you look at or hear totally talk about this shit, is you don't necessarily need validators to be profitable because they're largely or could be seen as loss leaders for ecosystem participants that just need direct connections to the chain, right? They don't have to trust someone else. A good example of this would be like Jupiter, right? If Jupiter is running a validator or even a full node, right? They might do that because that gives them the purest data from the chain itself and not have to rely on a third party. Therefore, it makes their service better. They can update pricing quicker. They can do all this stuff, right? But again, Jupiter has a profitable business on top of that that allows them to sustain that. Whereas in the Ethereum ecosystem, it's okay. These validators need to be able to make money because if they make money, it leads to a decentralized network, right? More people are going to do it just because doing this thing makes them money. And then more participation means more nodes, means bigger network, means more decentralized. It's also the reason I'm pushing back against the Bitcoin stuff, right? Because this thing that makes these things profitable, that incentivizes participation, is programmatically going to zero in the Bitcoin ecosystem, right? So like, there's a problem there in the long distance future. But that's the pushback on it.
Like it. Okay, that's very, very helpful to set up. David, I know you've got a take on this.
Yeah, I think again, it's kind of a like, does everyone know like what game is being played here, right? By the people who are proposing this stuff. So like the way Solana works, especially on the validator side, you've got this proposal now, right? Which is basically saying, hey, let's lower inflation, which directly impacts people's staking rewards, right? Whether that's a VC, whether that's a retail person, whatever. An attractive, and like maybe this is controversial, but for some of these networks, having a higher APY is actually like a demand pull for a lot of stake, a lot of institutional demand. Okay, we can get that. If your network is not outperforming demand by whatever the inflation rate is, then you're in a bad place anyway, right? It's not that high. So put that to one side as well. Like the demand should be outstripping that. And then on the validator side, right, running a Solana validator is one of the most profitable games in town. And the way that works is that all the block rewards on Solana go direct to the validator. So the validators don't even need this income. And what is the proposal that a lot of these people put through the other week is to previously the block rewards were burnt 50%. Well, that vote to make it 100% go to the validator got passed, right? So they're looking after themselves, and then on the back and you need to understand a lot of these VCs, right? They have backdoor agreements with the validators to get that if they're not already running one themselves. So then they're coming out and say, hey, we should lower the inflation rate for the everyday staker because it's better for the network, but we're going to increase our like rewards on the back end, right? So you need to understand like the games that people might be playing here. And again, it's not like equal for everyone. So I'm glad it didn't pass. I think having that stake and reward is good for the overall network. I think it's good for people. I think it brings in new people and it's an attractive thing to do. And ultimately the demand should be outstripping that supply every year. Man,
that is absolutely crucial information. So it sounds like you know, when we're evaluating this specific proposal, not knowing about that previous proposal, which you just explained, is really, really only half the story. Interesting. That is excellent. Really glad we were able to bring that to light. Kind of dive deep into how some of that stuff works. I suspect with all of these things, there's even more complications, as David, you might have just alluded to, like there's additional agreements and other things going on behind the scenes. But even just knowing that amount, I think is interesting to add to the conversation. So glad we managed to do that. Guys, we've got 5 minutes left now. So just want to touch on the final headline for today. Just do this one quickly. Pretty interesting. This is the news that Russia is using cryptocurrencies in its oil trade with China and India to skirt Western sanctions, according to 4 sources with direct knowledge of the matter. This is important because we didn't really know this about Russia before, from what I can tell. While Russia has publicly encouraged the use of crypto and last summer passed a law to allow digital currency payments in international trade, its use in the country's oil trade was not previously reported or disclosed. So at the moment, this is, as I said, just a report from Reuters. But what has been reported is some Russian oil companies are using Bitcoin, Ether, and stablecoins such as Tether to smooth the conversion of Chinese yuan and Indian rupees to Russian rubles, the sources said, adding that it is a small but growing part of Russia's overall oil trade, which, according to the International Energy Agency, was worth $192 billion last year. So I think that's pretty interesting to know. Obviously, one of the bull cases for all of these cryptocurrencies is that in an increasingly antagonistic geopolitical environment, which we are arguably moving into, but I think when people always thought about the antagonistic environment, it was always other people, right? I think in this scenario, it's not just the other people, it's the states also being quite difficult with not only other people, other parts of the world that they were traditionally difficult with, but also some of its allies. And the argument would be that that crypto is one of the ways that people can move money around the world in a better way. So that's an interesting development. Obviously, a lot of value there in that trade. Legendary. Haven't heard from you in a moment. Skipped you on the previous news. What's your thinking here?
Not surprised to see that. I mean, we've seen both Iran, we've seen Venezuela doing exactly the same thing to settle their trades, to have this intermediary, this middleman who takes whatever currency is coming in, converts it into crypto, sends it to the domestic business, who then converts into the local currency or into dollars or whatever other currency they want to settle their trade in. And it's a feasible way to circumvent sanctions, to make things work that are not supposed to work. And it's exactly a strategy that we've seen other countries apply. So it kind of makes sense that Russia does this as well. Maybe the thing that was surprising with it is the extent or volume of that. Based on this report, we are talking about some oil traders doing that to the extent of tens of millions of dollars a month. So that is significant volume. And yeah, it's nothing else to say or comment on that.
Yeah, I think it's just interesting to note. And I guess one of the other things I've been noting is the trajectory of the things we've been reporting on. I've said it a couple of times this week already, but the proportion had the joke point earlier that crypto will become less volatile the more suits there are at conferences moving forward. I also think the proportion of pieces of news that we report on a day-to-day basis, as that skews towards more either institutional or geopolitical stuff, there should also be some relationship in the volatility there. And we've just noticing, I think media is always a great indicator of how things are going. Noticing like a huge skew towards this more institutional corporate stuff. David, we were speaking before the show. I think you were speaking about like the disconnect between what you're noticing on the corporate institutional side of things and regular crypto participants. I don't know if you want to speak to the Russia stuff as well, or whether we want to go in that direction. Where do you want to take this?
Yeah, I think to that point, in terms of what's being talked about, what's happening in rooms and things with Russia and institutions versus what's everyone seeing on crypto Twitter, it's just, I think a lot of people focus a lot on crypto Twitter, and it's natural. It's the easiest way to get information. You're following people. But you've got to remember, a lot of the people you're following, right, are trying to build an audience. They have other motives as well. They're posting screenshots of fake trades, whatever it may be. They have insider deals. So really want people to just think big picture and zoom out, as cliche as that says, and look at some of these headlines and what's going on. I shared something in our internal Slack the other day. I think it was last week. The bullet points of the headlines were just the most absurd thing ever. Like US announcing Bitcoin strategic reserve, all these things that if you'd seen that 2 years ago, you'd be like, there's no way. Like if that happens, we're going to like Miller coin, right? So all this stuff's happening in the background, and you've got this moment in time where there's a disconnect between everything that's happening and building up, and obviously these shaky macro environments. But this is like almost the perfect situation as like an investor to look and be like, oh my God, look at all this unbelievable information that's happening and the markets aren't responding. Imperfect. Let's invest. So just try and try and see that view versus focusing on like meme coins and everyone blowing up and leveraging, etc. Like that would be my advice.
I like it. Super helpful advice. Good to point that stuff out. Guys, that is the end of the show for the day. Hope you enjoyed it. As always, we do this every single day, Monday to Friday at 7 a.m. Eastern time. We are live on X Video, YouTube, Apple, and Spotify podcasts. Have a wonderful weekend. Thanks to Legendary, Bread, and David for co-hosting with me as usual. We will be back with you on Monday. Take care. Have a great weekend. We'll see you on the other side. Bye-bye.